Hey, Kevin here, top 1 financial advisor and best-selling author, and we are here to talk about the stock market. As mentioned, I was going to break this video up into a few pieces because y'all had a lot of questions. We had a lot of news and things that came out over the last few days and a lot of confirmation. I like confirmation, I like info, I like data when we can have proof whether or not this was right or it was wrong or it's somewhere in between. Now, today I want to discuss what I have been talking about early this year and late last year when I said that I think banking is going to be the place to be based on what we knew from the coronavirus pandemic. At that point in time, we had record low interest rates, which we still have, at least as of this recording. And we had a lot of things that went on that made banks less profitable, but also more attractive. Once we knew, and this was around December of 2020, once we knew we had vaccines, once we knew people were going to start to go back to work at some point in time, we started to see light at the end of the tunnel. And I said back then, a lot of the businesses that were closed, a lot of people who weren't able, or there was a moratorium on mortgages and things like that, that banks weren't making that money. And once people were going back, once people got back on their feet and started to use that stimulus money, that banks were going to lessen those losses, or cut those losses, which is going to help them to become more profitable, which was true. So if you go back to the video, I will link this in the description below as well. On December 29th, I said, look, this is what's going on. There were billions of dollars flowing into financial stocks. And I said, that is the place that I think is going to be one of the best performing sectors of the market. It is why in December of 2020, I invested in Capital One at that point in time. You can go to public and check the receipts if you want. I've been an investor of Capital One since back then. Okay, so that was what I was saying. Now this week, the reason why it's coming up now is because there are a lot of companies that are announcing their earnings this week. Earnings, that's when a company comes out and says, hey, this is what we did over the last quarter, this is what we expect moving forward, here's some new things and strategies that we're coming up with. A lot of financial companies are reporting. Some of those include JP Morgan, Goldman Sachs, Morgan Stanley, Bank of America, and more. These companies were some that I mentioned at that point in time as targets that could be on your list. I also listed a few regional banks back then at that point in time as well. And obviously I talked about Capital One because that's the company that I ended up buying. So what are the results at this point in time? Now, generally, I wait until December and then I sit back and decide what I'm going to keep and not keep. And I'll give you my recommendation of what I think you should do with the banking sector based on what we know in 2021. However, at the point in time, and you can check this on Twitter as, not Twitter, check this on public as well, from the time that I brought that up, December 29th to right about now, I'm sorry, actually no, a year. So from October 12th, 2020 to the time that we are recording, so I'm sorry, the time that the chart stopped here, which was October 11th. So, you know, give or take a few points, this is gonna change a bit. But stock market from October to October is up 27%. 27%. I said banking, that's going to be the place to go. JP Morgan up 72% in the last year. Goldman Sachs up 92% over the last year. And Capital One, the company that I picked, the company that I was telling y'all about, the one that I put my money in, is up 114%. So we were correct. And I think the banking industry is going to continue to be the place. So let me give you a bird's eye view, or let's zoom out for a second and let's look at the economy, because when we look at the stock market, and this is an issue that a lot of people make a mistake on, and it's a thing that's very difficult to do, right? But when you are selecting companies, and again, I've been telling you, been hinting at it, y'all gonna hear a lot about it, but I'm creating a framework to help you to really analyze companies and see where things are going. That's one of the hardest things to do in the stock market. Selecting a company is one thing, but then deciding like, how did I know a year ago that it was gonna be financial companies? How did I know December of 2020 that I thought Google was going to be one of the best performers? And it was. So how do you do that? We'll get to that. That'll be a separate video. I promise you I will do a whole breakdown on it. However, back to the financial industry, here's what we know. So historic interest rates encourages borrowing. That's what we talked about, which means that I'm encouraged to buy a home, which I did because interest rates were mad cheap, right? But now that we know that, interest rates at some point are going to rise. I've told you guys and did a video on tapering, meaning that the Fed is going to not buy as many assets as they normally would, and at some point interest rates do have to rise. Interest rates and the stock market move in opposite directions, which means that when interest rates go up, or even the threat of interest rates, which we have talked about in the past, when interest rates go up, the stock market reacts, and there's usually a negative correlation in every industry except banking. Banking is the only industry that when interest rates go up, so too do banking stocks. And whether it is in 2022, which some people think it'll be late 2022 or at some point in 2022, but definitely in 2023, when we start to really recover and interest rates start to creep up, the banking sector is going to be the place to be again. So I think right now you can still find you some quality companies. You choose whichever one you want. I would do a reanalysis. So please go back and look at the bank stocks I liked at that point in time, and then update that research and see what fits right now in October of 2021 and see if those things still hold true. Stuff changes, right? Stuff changes. So you want to make sure that you go through and do that. But I think Goldman Sachs still makes sense. Obviously, Morgan Stanley, Capital One, the one that I own, a lot of them can make sense. I think as interest rates do rise at some point in time, I don't know when that point in time is going to be, it's going to continue to rise as well. A lot of these banks do what's called stock buybacks. Go back and watch the video from December 29th of 2020 to understand more of what that is. Again, I think the financial industry is still going to be a very, very good place. And I think it's somewhat low-key where not everybody's really hip to it yet. Everybody's still stuck on technology, which is fine. I think it's still a good place. But do keep an eye on the financial industry. I think that's where things are going to continue to move and be. So that's what I want to say about the financial industry. In the next video, I'll give you some financial ETFs that people have been discussing and asking me about, because yeah, it is safer, right? It is safer to get a group of stocks or a group of financial stocks, if you're into financial stuff, to grab those together as opposed to trying to pick which one is better at a Goldman Sachs and Morgan Stanley or Capital One and Bank of America, and the list goes on. Why not get you something that gets them all and get you hopefully somewhere close that 70, 80, 90% return? Now, I don't know that. I got to go through and look and research. And when we do, I'll do it here on the YouTube channel. So thank you guys for coming out. Like, subscribe, do all of that stuff. And this is, again, why you want to be a part of the email list, because I send an email when I find out and I learn, I research and I spell check. Then I send you guys an email and say, hey, look, this is what I'm looking at. Here's a video that corresponds. Here's my research. Take that how you will. So you definitely want to make sure that you're on the email list. And that is what we have for the financial industry. Let me know what you think in the comments. That's it for me. Talk to you guys later.